Something big is happening to gold right now. Delivery requests are spiking, countries are demanding their gold back, and central banks are buying more gold than they have at any time in modern history, all while the public is left holding paper promises like ETFs. See, most people don't realize it, but a gold ETF does not make you an owner of gold. It makes you a claimant, a shareholder in a trust that may or may not hold the gold it claims. You can't touch it, it charges you fees, and when the system breaks, that claim could be settled in cash while the physical gold disappears into private ownership that is not yours. Meanwhile, central banks aren't buying gold ETFs, they're demanding physical delivery, repatriating their gold from overseas, and they're doing it for one reason. Because when the system collapses, the only asset that matters is the underlying asset, the real deal. So today we're going to break down why physical gold and gold ETFs are not even close to the same thing, what central banks know that everyday buyers don't, and most importantly, how you can use this information to protect yourself before it's too late. Let's get into it. Most people think that by buying gold ETFs, their wealth is protected. But the truth is, when you invest in a gold ETF, you do not own gold. You're investing into a financial instrument, one that typically tracks the price of gold or is backed by a pool of gold, meaning that you have a claim, not ownership, and those are two very different things. In fact, that pool of gold, which may or may not be there, I say that because you can't touch it, see it, or audit it. Yes, they do their own inspections and reporting, but given everything we've seen with Fort Knox this past year and recently the LBMA gold runs, I just don't think you can be too careful. But let's say that the pool of gold is all there. When you invest in a gold ETF, this is very important. You are not getting a specific coin or bar. What you are getting is an unallocated claim, meaning your claim is an investment on a portion of that pool, but not anything specific, which is a very important distinction. See, this concept isn't new. We've seen these tricks before in the stock market. If you're familiar with David Webb's The Great Taking, then you already know that being a beneficial owner or an unallocated owner or claimant is very different than having outright ownership. This is important because essentially in times of crisis or insolvency, you as a claimant could be bumped down much further back while other creditors get paid out before you. This leaves you completely vulnerable at a time when you would need it the most. But not only that, many gold ETFs claim that you can be paid out in physical gold, but have you read the fine print? Because most of them go on to say that in times of extreme redemption, such as a financial crisis or turmoil, when many people would be trying to pull out their physical gold at once, then it is not guaranteed that you get paid out in gold. They could settle in cash. But ask yourself this. If you bought gold to protect your wealth from a collapsing dollar, do you really want to be paid out in cash when the dollar is the problem? Tell me what you think. Let me know your thoughts in the comments below. I want to hear from you on this. Because for me, I'll tell you one thing, in a currency reset, cash isn't going to do it. I want my gold. And if I can't guarantee that it's mine or that I have it or it will be delivered, well then I'm just leaving myself open to risk that quite frankly, I can't afford. That's not real protection. But not only that, think about the layers of financial middlemen that you have to trust. The counterparty risk is so extreme, from custodians to fund managers to banks. See, most of these gold ETFs, they're backed by these banks, large institutions like JP Morgan. And we know that none of these banks are safe from risk. If there was a liquidity crisis, like one of the many that these banks have narrowly escaped over the last 5 years, well then again, as a claimant, where do you think you fall in the list? When they go to make people whole, you're going to be all the way at the very bottom. But here's what makes it even worse. This is what makes me mad. The risk is hidden on purpose. If you go to any financial advisor right now and say, you know what, I actually want to be diversified. I want to be in tangible physical assets, whether it's gold or real estate, whatever it might be. You know what they're going to say to you? They're going to say, great idea, terrific. Yeah, I've got just the thing for you. See this fund right here? All you have to do is click here, click there, boom, done. You're protected. But you know what's the truth? You don't own anything tangible. You don't own anything real. It's all still inside of their system. Why? Because if they keep you in their system, they keep making the fees off of you and they keep you in their control. So if someone tells you, oh, ETFs, they're so easy, they are. I'm not saying they're not, and everyone has to do what's right for them. But what makes me mad is the vulnerabilities that are not laid out and explained clearly to people. If your goal is to protect your wealth from this currency reset that's happening, but yet you're putting your wealth in a dollar-denominated asset inside of their system that you just have a claim on, an unallocated claim, well, that's not going to achieve your goals, and that is the difference. That's what I want to make sure everyone understands, which is exactly why we have created a brand new guide, which everyone should download. It is called the Built to Endure Guide. It has tons of incredible information on currency resets and physical gold versus paper promises, as well as exactly how to protect your wealth. You can get your copy right now by clicking the link in the description below or scanning the QR code. Because gold isn't just an investment. I mean, it is, but it is so much more. We talk about this all the time, but if you're paying attention, you already know. The decline of the dollar, geopolitical tensions, escalating war, everything that is happening right now that is pushing us faster and closer towards a currency reset, where the dollar will not have nearly as much value as it has today. It already has so little value. But we're going to see inflation leading to hyperinflation and a rapid devaluation or potential revaluation of the dollar. And when that happens, you're going to want to be protected outside of the system, outside of their rules, not in a fiat currency denominated version of what they're selling to you. Another way to think about this, I always say, is look at what those in power are doing, those who know what's coming next, not what they're saying, but what they're doing. Central banks, according to a brand new 2025 World Gold Council report, 95% of central banks are planning on increasing their gold reserves over the next year. And get this, over half of them are going to make sure that they keep that gold at home. Why? Why are they doing this? Because they see what's coming, a crisis, and they know that when you hold it, you own it. Other institutional buyers aren't being left out of this either. COMEX deliveries. We talk about COMEX deliveries being up, not just up a little, up a lot. 15 times Q1 of this year compared to the average of the last couple of years. Why is that? Why is it physical gold and not paper promises? Because trust in the current system has been broken. This isn't some market shift. This isn't a one-off incident. This is a systemic transition, one that those in power are positioning for as we talk. Throughout history, whether it's Venezuela or Weimar or modern day Turkey, when we look at currency resets, there has to be a return to trust. And trust is gold. Gold is trust because it has been around as a true store of value for thousands of years. Unfortunately, things are going to get worse. The reset is already in motion. You don't need to know, though, the exact date. All you need to know is that you are prepared and positioned before it happens. What would you rather have? Real, physical gold, true money, or a paper promise? I know what I would rather have. So again, it is essential that not only do you have your physical gold and silver, that you're prepared, but that you have a strategy in place. Again, not a normal strategy for market cycles, but one for a systemic transition. That's what we're talking about here. A legacy mindset. How do you build generational wealth when everyone else, unfortunately, who is not paying attention is going to be left behind with nothing? If any of this resonates with you, again, download a copy. You have another chance right here. QR code above or a link in the description below of the Built to Endure report. Again, this is a brand new report we created with over 100 years of data, historical examples, and clear, actionable steps that you can take to protect what's yours today. And in the meantime, I so appreciate you being here. I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.